Hello, and thank you for joining us at xm.com for this weekly Outlook video. I'm Cristina Marujos, and joining me today is Senior Investment Analyst Rafi Boyajian. We'll be having a look at the week ahead. Now, the Bank of Canada is holding its policy meeting this Wednesday. It's expected by many to keep a neutral stance, making it therefore the only major central bank, apart from the Bank of England, to not adopt an easing bias. Now, what do you think will come out of the Wednesday meeting, and how will it affect the loonie?
Well, we're expecting the Bank of Canada to keep interest rates unchanged. Recent data has been on the strong side. Normally, we would expect the Bank of Canada to raise interest rates, but given the global economic uncertainty, the bank will likely maintain a cautious stance. But given the fact that the Fed is widely anticipated to cut interest rates, we have seen the loonie surging to 8-month highs. So if we get any indication from the bank, it's worth mentioning that we'll also be getting the quarterly monetary policy report, where we're going to get an idea as to what the bank's growth and inflation projections are. If you see any indication that the bank is considering or could be moving towards a rate cut later on in the year, we could see the loonie perhaps come under pressure.
I see. Now, on the flip side, things haven't been looking up in the UK. Disappointing data in Q2, and of course the ongoing Brexit saga have taken a toll on the sterling. Now, the UK monthly GDP report is expected this week. Do you think if the data for May is on the poor side, that we will see a shift in the Bank of England? It will adopt a more dovish stance?
That's certainly a possibility. In April, we did see a shock GDP contraction of 0.4%. If we get another negative reading for May, that would certainly raise the expectation that the Bank of England will have to reluctantly cut interest rates later this year. The pound, we've already seen it come under pressure from Mark Carney's recent remarks, where he was somewhat more pessimistic, and that could possibly be the start of the Bank of England shifting to a more dovish stance in line with other global central banks.
I see. Now, let's move into the U.S. now. We're expecting another important report, the U.S. inflation. And even though it's not considered to be a game changer regarding a rate cut by the Fed, the FOMC minutes due on Wednesday this week may provide some important clues.
That's right. U.S. inflation, the consumer price index, is unlikely to have too much of a big impact because the market expectations of rate cut are so strong. But there's still uncertainty as to whether or not we're going to get a 25 or 50 basis point rate cut in July by the Fed. So the minutes of the June policy meeting could provide us some clues as to how many FOMC members are thinking about a rate cut, how dovish they are, and what we could possibly get at the July meeting.
And finally, let's have a look at China. The trade data is expected this week. Recent PMIs have been quite poor, so all eyes are on the trade data. And given the fact that the trade war with the United States is still unresolved, what could this report tell us about the Chinese economy?
Well, we're expecting exports to have declined slightly in June. That would be seen as a further confirmation that the Chinese economy is slowing once again. We already had the manufacturing PMIs for June. They were weaker than expected. So that's another sign that the US tariffs are hurting Chinese businesses. So if there is a worse than expected number in the trade figures next week, that could perhaps hurt risk sentiment. At the moment, risk appetite is pretty much being supported entirely by those expectations of a rate cuts around the world. So any surprises in next week's numbers, we could see perhaps a little bit of risk aversion returning to the markets.
I see. Rafi, thank you for joining me today.
Thank you.
And thank you for joining us at xm.com.